In this video we learn about the Bullish Hammer Candlestick. A bullish candlestick hammer, commonly referred to as a and quat hammer, and quat, is a type of candlestick pattern that signals a potential reversal in a downtrend. Here are its key characteristics of a hammer candlestick. Shape. It has a small body, which can be either green or red, located at the upper end of the trading range. The lower shadow, the wick, is long, typically at least twice the length of the body, while the upper shadow is either very short or non-existent. Placement. The hammer pattern appears after a downtrend, indicating that sellers have lost control over the market and buyers are starting to step in. Color. While the color of the body can be green, bullish, or red, bearish, a green hammer is generally viewed as stronger and more bullish than a red hammer. Volume. High trading volume on a bullish hammer can enhance its validity as a reversal signal. Interpretation. Reversal signal. A hammer candlestick indicates that despite the sellers pushing the price down, buyers were able to drive the price back up, signaling a potential shift in momentum. Confirmation. Traders often look for confirmation of the reversal with subsequent candlesticks. A strong bullish candlestick following the hammer is typically seen as a confirmation of the reversal signal. Trading strategies. 1. Entry point. After a hammer candle, traders may consider entering a long position when the price breaks above the high of the hammer. 2. Stop loss. Placing a stop loss order below the low of the hammer can help manage risk. 3. Target. Setting profit targets at previous resistance levels can be part of a trading strategy following the confirmation of the hammer's signal. Conclusion. The bullish hammer is a useful candlestick pattern for traders looking to identify potential reversals in a downtrend. Being aware of context, including market conditions, support and resistance levels, and other indicators, can improve the reliability of this pattern.